Good morning, everybody that's joining. Welcome to you all. Madeleine Pretorius, she's your presenter today. She's on her way, so we're going to be starting a few minutes later. So while we do wait for her to come online, I'd like to pose a question to all the people that are joining us at the moment. One, whether you have in fact experienced fraud in your small business on any past occasion, or employee fraud that is, or whether you maybe suspect some employee fraud in your small business presently. I think it'll be a very interesting opening up chat amongst us, and then just give us a little story about what has happened or what you might think has happened. I think it's a very common issue, especially in today's economic times. And while people are way more under financial pressure and stress, they very often might do things that they would not ordinarily do. So it is an issue, especially at these times. And if anybody has any stories to share with us or any concerns to share with us before we get going, it'll be great to hear from you.
There we go. Hello, Dennis.
Yeah, no, it was just an issue. We do rentals. It was an issue on the rental side where the employee involved changed, even though they were PDF files, changed some of our standard documents and put different bank details in. And although we reconcile the account every month, etc., this particular person had a short-term deadline where somehow, for some reason, she probably thought she was going to pay it back and didn't. And in the reconciliation of the second month, it pitched up, combined with a complaint from the landlord who said, "Where's my money?" So that's the story.
Thanks for sharing that story with us, Dennis. That is definitely one of the areas where employees may change their bank details to their own in several fraud issues. So it's very interesting. Sometimes it's also on the creditor side when they're paying creditors. They might say paying creditors and give a name of a creditor appears on the bank statement as the name of a creditor, but in fact they're actually paying their own bank accounts. So yes, you come across a lot of bank changing details. Another thing to also be concerned about or be wary of is when debtors of small businesses ask, well, what are the bank details I need to pay into? Very often that's done on email, and sometimes invoices don't hold the full bank details. And very often that can also transpire where, in fact, they give their own bank details and not the bank details of the actual business itself. So interesting that she's managed to change a PDF invoice, the bank details on a PDF invoice, meaning that she's obviously had the add-ons in order to be able to do so. But thank you for sharing that with us, Dennis. Thank you. It's something that I think all small businesses need to be aware of. Are there any more experiences that anybody else would like to share or concerns that anybody else would like to share? I think we must also understand that fraud is not only about money. Fraud is also about time, or stealing of the company or the employer's time. So hours on Facebook are not actually producing or being efficient at work and those sort of things. So is there anybody that would like to share some of their experiences or concerns at the moment? I've been an accountant for more than 37 years, and I can tell you stories that as an accountant, what we have found and the ingenious ways some employees commit fraud against their employers. I could be here probably all day telling you loads of different types of stories. I think that small businesses need to realize that they need to have certain controls in place. And once, I think Madeleine's obviously going to share that with us later, that's certainly going to assist in at least mitigating some risk against employee fraud. I've introduced myself. I'm Monique Charland and the CEO of the National Franchisor Company Business Accounting Network, or better known as BAN. And I would like to extend a very warm welcome to all of those joining our monthly business webinars for the very first time this morning. And also a very warm welcome to all of our clients. I believe, Shane, we've got over 120 people registered for this webinar around the country today. So evidently, the title of the topic that we are presenting sits quite close to many of the small business owners. One of the most serious threats, I would say, to the success of a small business is, in fact, employee fraud. And it's often created as a result of misplaced trust, or lax hiring, or lax supervision of the individual, and a failure to implement basic financial controls. So in our capacity as accountants, we come across employee fraud in small businesses from time to time, often quite unexpectedly, as accounting services are not designed to identify fraud. Accounting is not forensic auditing. However, the accounting controls established by our band accountants very often identifies these irregularities. So by outsourcing an independent accountant from your business, this in itself will enhance the control environment in your business and possibly deter fraudulent activities, whilst also benefiting business owners on many other levels too. So our presenter today is Madeleine Pretorius. I'm sure many of you who have been on our webinars are quite familiar with Madeleine. She will be delving deeper into the reality of employee fraud in small businesses and the measures that you can take to prevent it. Madeleine is a band franchise owner. She's based in Paarl in the Western Cape. She qualified as a chartered accountant in 2012 after completing her CIPA articles at PricewaterhouseCoopers in Gauteng in 2011. Madeleine is a registered CA with the South African Institute of Chartered Accountants. And just before we get started, Madeleine and I would love to hear from you. So if you have any questions, any stories to share, any concerns during the presentation, please type them into that chat box in your control panel that Shane has already shown you how to access. And we will address all your questions and stories and have an answer session after the webinar. So let's get into it. Welcome, Madeleine, and over to you.
Thank you for your lovely welcome, and thank you to everyone joining us today. It's really a great opportunity to be able to present this webinar today. I'm here in a very cold and rainy Paarl, and I believe a lot of you are joining us from quite a number of places, so that's really great. Thank you very much. I'm going to just be turning off my video camera during the presentation just to make sure that we don't have any drops in the line. Yeah, let's get started. So today we are having a look at employee fraud in small businesses. And just as a quick overview, we're going to have a look at what fraud is and why it affects small business, what the common types of employee fraud are, and this is purely for an understanding, because the more you understand about fraud and the more you have an awareness of the types of fraud that could occur, the more you can understand how to apply that in your business and where you can possibly spot weaknesses to prevent it happening. We're also going to have a look at some warning signs, what to look out for in your business, and then also some measures to prevent fraud, because I think that's ideally what everyone or every business owner would like, is to actually make sure that fraud doesn't actually happen in their business. So what is fraud? I think most of you listening today already has heard of fraud or has an understanding of what fraud is. So I've merely just put down a few key phrases or key words for the presentation today. So we're looking at an intentional act or a failure to act. Things like deception, false representations of facts, suppression of truth, unethical behavior, an unlawful advantage at the expense of another. So fraud refers to a deception that is intentional, and it is usually caused by an employee for personal gain. And an interesting thing to just consider is that it results in harm or a disadvantage to another party. Now, when you think of fraud, I think a lot of you might immediately think of large corporates, large number of employees, a lot of money and transactions going around in big companies, big corporate companies. And you might think to yourself, yeah, but really in small business, do you really think fraud would be prevalent in small business? Some of you might have heard of Enron. This occurred it was massive corporate fraud in the US in about 2001, 2002. Also a large corporate company, and more recently here in South Africa, you might have heard of Steinhoff. In about 2017, there was a lot of management fraud where they overstated profits, and Reuters reported about $7.4 billion worth of fraud, accounting fraud. So very often when fraud is reported in the media or when you hear about something, it's the big corporates that are involved. So why does it affect small businesses, and why is it something that we as business owners should consider and take very seriously? Well, small business depends largely on trust of employees. A small, tight-knit team very often that runs the business or deals with operational and the financial side of things. And as a business owner, you depend on the loyalty and trust of your employees. And small business, interestingly, is more likely to be affected by fraud than the large corporates, because the large corporates, even though they have many employees and a lot of the times a bit of an anonymous feel to its culture, because they are much larger and they have the resources to implement internal controls, they do have formal policies and procedures. Whereas small business, because they have a smaller number of employees that are very often responsible for multiple tasks, so they aren't siloed, they might be responsible for most of the financial functions, what might go into the operational side as well. Because small businesses don't have as many resources often as the big corporates, they don't maybe necessarily have the basic accounting controls or formal procedures in place. Very often, the owner of the business is very busy with operations. As an owner of your business, you are working hard and putting time and energy into building and growing your business. And very often your focus can be pulled into different directions at once. That's normal for a business owner. But what is important is that you remain focused on the financial side of things as far as you can, because that's where opportunities for fraud creep in. Often business owners might say, but I'm not too comfortable with financial side of things. So even if I do perform a review, I might not know what I'm looking for, or I might not actually understand the accounts. So that's another thing why small business is very often affected by fraud. And then very often, as we just mentioned, or as I just mentioned a bit earlier, there's the thinking of, this won't happen to me. I'm a small business. I know all my employees. They're almost like family to me. So they're working for me. They've been working for me for years and years and years. It can't possibly happen. But the risk or the likelihood of internal fraud in long-term employees is just as high as for new hires or new employees. The smaller your business, the higher the risk of employee fraud, and also the greater the proportionate losses suffered. And this is purely because small businesses may not have the resources to recover after a fraudulent incident. And that could be devastating to the business. It could actually possibly break the business. So this is an extremely important part of your financial operation or your financial system to take into consideration. I'd like to show you or introduce you to the concept or the theory of the fraud triangle. I'm not sure if some of you might have come across something or similar to this before, but if you are new to it, that's all right. We're going to have a look at it today. But the reason why I'm showing you this is because the fraud triangle explains the reasoning behind employee fraud. And once you understand how that, or the thinking or the mindset behind someone who commits a fraudulent activity, it's much easier to understand in your business where the red flags are and where you need to possibly be more vigilant where fraud can actually occur. Now, this fraud triangle or the fraud triangle theory was developed by Donald Cressy in the 1950s. So you might think to yourself, oh my goodness, how can this still be applicable today? It's so many years ago. And so yes, there have been many advancing theories on this fraud triangle, but in essence these three could I say these three elements of the fraud triangle are still relevant and they are important to understand. So what this theory actually says is that for fraud to occur, there has to be opportunity. There has to be some sort of incentive, or they also call it pressure, and then rationalization by the employee to actually commit the fraud. So the opportunity side of things refers to the circumstances that allow fraud to occur. So it looks at the structure of your business, it looks at the number of controls that you have in place, and this, in the fraud triangle, is the only component that the company exercises complete control over. You have control over how you run your business, so the opportunities for fraud to actually occur can be determined by how your business is structured. The incentive or pressure, as I mentioned, refers to an employee's mindset towards committing fraud or their personal circumstances. So, for example, you might have an employee that has a gambling problem, which you don't know about. That might be an incentive for that employee to consider committing fraud to be able to get more cash. Or it could be personal circumstances that have changed. It could be an employee that has worked for you for many, many years, but suddenly they are going through divorce proceedings and they need cash possibly to make alimony payments or something like that. So their personal circumstances could possibly also give them some incentive to commit fraud. And then the third leg of the triangle is rationalization. And this refers to the justification by the employee for committing fraud. And very often this is the hardest leg to spot. Because it's an internal, almost like a mind wrestling thing for the employee. Because often to commit an illegal or unlawful act or something that you know is unethical, you have to rationalize it to yourself first. And that's what the employee does to be able to commit fraud. So let's have a look at a very brief example as to how this triangle works and how the thinking behind committing fraud works. And that will help you to identify the warning signs in your business. So let's say, for example, Jane is an employee of a business. She has been at that business for almost 12 years. So she's a long-serving employee. And over these years, she has proven herself to be trustworthy. She's loyal. She's reliable. She's really off work. She doesn't really get sick. She doesn't take a lot of vacations. So she's one of those steadfast employees that you know you can rely on and that she will do her job properly. And she's very knowledgeable. She knows what she's doing. And Jane is a bookkeeper, so she's responsible for the full accounting function in a business. So she works in a small business. And the owner of the business, Tom, is very fond of her. She's almost like family to him. And because she's so trustworthy, he's actually more than happy to give all the financial function to her. He can focus on the operational side of the business and making sure the business grows and things like that. And recently, he's actually given her access to the business bank accounts because he knows that she's responsible and she will make sure that the suppliers are paid on time, the tax payments are made, and she can do the receipting and supplier recording much more easily because she has access to the bank accounts. But what the owner, Tom, doesn't know is that Jane has recently, Jane's husband, Mike, has recently lost his job. But he's very close to retirement age. And so it's quite a thing now because there are a lot of retrenchments going on in his company, and due to some complications that no one was aware of, his pension payout is not what it should have been. And now suddenly they are in financial distress. So immediately from what I've explained, you can see that there is opportunity. So that's the first leg of the triangle, because the business owner has given Jane access to the full financial function, including the business bank accounts of the company. And Jane now has incentive or pressure to consider another way of obtaining cash because her husband has lost his job, they have pension problems, and now suddenly there's a cash flow or financial distress situation in her private life. So Jane comes to work one day and she's really worried about the situation that she's dealing with her husband. And she thinks to herself, well, you know, this business is doing really well. They have a lot of profits, cash flow is great, things are looking up. And I'm sure Tom won't mind if I just take a little bit of the cash just to tide us over until Mike and I are settled, and I'll definitely pay it back. And that's the rationalization leg that Jane is doing now. She knows that she shouldn't be committing fraud, but she's rationalizing to herself by saying, I'm paying it back. She might have every intention of paying it back. But the problem with fraud is the moment you start small, it snowballs, and after a while you won't be able to pay it back, or you might not want to pay it back anymore, as long as it carries on that it's not actually discovered. And what she then does is she uses the company funds to start paying for personal expenses and putting it through the books as business expenses, because she has access to the suppliers, she has access to the accounting records to record expenses, and she has also access to the bank account to divert the funds to her own account and authorize the payments going through. So from that example, I'm hoping that you get a more comfortable feel about this concept called the fraud triangle and the three different legs: opportunity, incentive, and rationalization, and how that all ties in to almost enable or cause an employee to commit fraud. I'd also like to look at the common types of employee fraud, and there are various categories that I'm going to have a look at, because once you have an understanding of what could happen in your business, it's easier to look out for it, and it's easier to then spot the weaknesses in your controls or in your business to see which processes or procedures you can put in place to actually safeguard against fraud being committed. So the first category that we are looking at is asset misappropriation, and one of the most common types of fraud that you'll probably see or you might come across is cash theft. So whether it's a simple petty cash theft, so there's petty cash in the office that kind of disappears from time to time, or you might receive petty cash to make a payment as an employee, or you might give it to an employee to make a payment and they just don't or neglect to return your change, things like that, to more elaborate schemes like forging signatories on bank payments, or something called skimming, where an employee would receive cash from a receivable, so from a customer, and instead of reporting it in the accounting records, they pocket that cash. So that is one type of asset misappropriation or type of fraud. You could also get product or services theft. For example, direct product or inventory theft, so employees that steal or take product or inventory, or they could be making use of company services for personal use. And the one thing that I always think of is a company car. Are they using that vehicle for personal use, or are they using a company credit card or fuel card for personal fuel purchases? That's quite common too. Expense account or reimbursement fraud. So using the expense account for personal expenses and submitting them as business-related expenses, or putting in an expense claim or a reimbursement claim. So you might have actually had a business expense that you paid for yourself and now you're claiming it back from the company. But some employees might forge receipts or invoices. They might double claim on their reimbursements, or they might inflate or falsify their expense claims. That happens. Procurement fraud, where an employee might overorder on a product that the business needs, then they return some of that product, but they pocket the refund for themselves. Or they could initiate the purchase of goods on behalf of the business, but it's actually for their own personal use, and then they take it for themselves. And then payment fraud looks at creating things like false supplier accounts, generating false payments, and also possibly self-authorizing payments if employees have access to bank accounts. Just remember that when we look at these types of employee fraud, it's not an exhaustive list. There are many different types of fraud, but these are almost the more common or items that, or categories that you might come across in your business more often. The second category that we are looking at is accounting fraud. So that goes and looks at what happens in the accounting records. And one type of fraud is embezzlement, which is the diversion of funds to your own account or to the account of an employee. So looking at it from the side of the fraudster, while you control the funds or have access to those accounts. Usually, an employee would stand in a fiduciary relationship or an ethical relationship with their employer. And this is when embezzlement occurs, when they actually divert funds, when they should have taken the care to act ethically and in the interest of the company. False suppliers, I mentioned that on the previous slide, which is accounts payable fraud, creating of false payables or false suppliers, and then possibly falsifying invoices to make payments to them, but the payment is actually going to the employee's bank account. Or it could relate to the diversion of payments to a legitimate supplier, but it's diverting into the employee's bank account. Once again, personal purchases, using company funds to make personal purchases and recording them as legitimate business expenses in accounting records. And then accounts receivable fraud, things like fictitious sales, skimming, which I mentioned in the previous slide, and also something called lapping. You might have heard of that term, where you are altering the accounting records to hide stolen cash. So an employee might actually take the money received from a customer and write off the accounts receivable, so that they are hiding the fact that the cash was never actually paid into the business, and legitimately paying off that accounts receivable. And it could also be an instance where a subsequent payment, if they don't write off the accounts receivable, the subsequent payment that they receive from that same customer could be used to hide the original cash receipt that employee stole or used fraudulently. Payroll fraud. This is a large section or a big category where fraud very often occurs. So in your business, be on the lookout for payroll fraud. Payroll fraud, we look at things like ghost employees, where the person responsible for payroll sets up false employees and then makes salary payments to this employee, but the payment actually gets diverted to their own bank account. Or it could be something like an ex-employee, someone who has actually resigned, who is kept on the payroll system, and legitimate payments are still being made to that employee, but the funds are being diverted to the employee who is responsible for payroll. Another example of payroll fraud are employee advances. So an employee might request a payroll advance, but they don't pay it back, either through negligence or through intentionally deciding that they are not going to pay it back. Timesheet and overtime fraud. So things like overinflating the hours that you worked, or claiming overtime when you know you actually didn't legitimately work overtime. And something which I'm not sure if it happens that often. I must say I haven't personally come across it before, but workers' compensation fraud, where an employee might exaggerate an injury that happened at work, or they might invent an injury, or attribute an injury that occurred outside of work to something that might have happened in work, just to receive the compensation pay. So it's just something to look out for, and possibly considering that when you make workers' compensation payments, possibly make them directly to the medical practitioner based on the claim instead of to the employee themselves. Another category where fraud does occur, and it seems to be occurring a lot more these days because of more reliance on systems and processes and data and technology of businesses, is data and intellectual property theft. So for example, an employee might steal or download customer contact lists to sell to a third party. Or if they have been possibly let go or retrenched, they might download their customer contact lists to use personally at their new job. They might steal personal information like customer IDs and credit card information of customers or things like that to sell to a third party who might not use it properly or very carefully, or consider the integrity of that person's information. And also things like trade secrets. As a business owner, you work very hard to build your business, to build your brand. And the theft of trade secrets or business proprietary information or intellectual property is also a form of fraud, where an employee takes that information and sells it to possibly a competitor. And the last category of fraud that we are going to look at is corruption. I think most of you have probably heard of this, bribery, kickbacks. And where this category, corruption, doesn't necessarily always result in financial loss to the business, it could hit your business extremely hard from a reputational point of view. So bribery looks at where an employee pays or provides benefits to secure an advantage either for the business or for themselves. And kickbacks refers to an employee who receives payments or benefits from a third party in return for some sort of business advantage or possibly a discount, something like that. And as I say, it might not result in financial loss to the business in all cases. If it does come out that your business is involved in corruption, it could have devastating reputational effects. So what should one look out for? What does one need to consider in your business to make sure that you actually notice or come across fraud instead of carrying on with the operations or even the financial transactions and not even knowing that it's occurring? Because the sooner you come across the fraud, the sooner you can stop it, the smaller your possible loss or distress might be. So what warning signs can one look at? An employee living beyond their means, where their lifestyle suddenly doesn't match their salary. So unless your bookkeeper has won the lottery or received a very large inheritance, you wouldn't expect them suddenly to come to work with fancy sports cars or very expensive handbags and things like that, in the case if you have a female bookkeeper. So just something to look out for. Then an unwillingness to share duties or being secretive. Now the big thing about a fraudster is that once they engage in fraud, they need to make sure that they are not discovered or caught out. So they need to make sure that they hide their audit trail and the paper trail, or they hide their fraudulent activities. And so if there's an unwillingness to share duties or tasks, or they're very secretive about what they do, it might be a warning sign that they're up to something or up to no good. Being under pressure on the job, it might cause the employee to think, well, I'm working so hard, I'm working even harder than the business owner, and I'm not even paid half of what the business owner gets. So it could create an incentive for committing fraud. Family problems or divorce, so a change in circumstances of the employee where they suddenly need extra cash flow or they are in financial distress, that could be a warning sign. Defensiveness or refusal to follow proper procedures. So an employee who feels that they are above the rules and they don't need to follow the policies and procedures in place in the business. Could be someone who doesn't really care about the interests of the business, and it might make it easier for them to commit fraud. Things like past legal problems. The employee might have a criminal history, something like that. Refusal to take vacations or regularly staying late or working on weekends. As I mentioned before, a fraudster needs to hide their fraud. So that employee who never ever takes leave or who always stays late or works on weekends when no one else is around, that might be someone who you just need to look into. Because on one hand, they might be a really hard-working employee, legitimately, but on the other hand, a fraudster needs to make sure that if they are not there and someone takes over their duties, that their fraud might be discovered, and they need to make sure that that doesn't happen. They also possibly want to do their work when no one else is in the office so that they can actually get away with the shenanigans that they're doing. So that's definitely a very kind of a key warning sign to look out for. Then frequent tips or complaints about a certain employee. If you just keep your ear on the ground as a business owner, sometimes your other employees are actually the first people who come across something that is strange or an inconsistency in the accounts, which is our next warning sign. So it's always important to just keep an ear out as to what's going on in the business. What you could also look for under the inconsistencies in accounts, and it ties into what we looked at in terms of the type of fraud earlier, is if you suddenly receive a call from one of your suppliers, or you receive a creditor's statement that says you are outstanding on payments, but you know for a fact as a business owner that you are fully paid up, maybe look into it, because it could be someone who's diverting supply payments not to the actual supplier, but they are diverting them into their own bank accounts. And that could be a warning sign as well. So what do you need to do as a business owner to make sure that you have steps in place in your business to safeguard you against fraud. So we're going to have a look at a few general fraud prevention do's and don'ts. The first thing, and it's quite an important one, and sometimes business owners do neglect to be quite specific about this, but that is to instill an ethical culture and enforce ethical behavior in your business. Now, small businesses might have a more casual environment. They might not be as formal as your big corporates, but it's important to have a zero tolerance approach to unethical behavior and to develop a culture of honesty within your business, because that will automatically enable your employees to think twice before they commit fraud. And it will encourage your employees themselves to be on the lookout for inconsistencies and to do the right thing. That ties into our second do, and that is encouraging the reporting of inconsistencies or setting up an anonymous tip line. Now, in small business, an anonymous tip line is not necessarily always practical or really necessary, depending on the number of employees you have. You might have only a handful of employees. But it's important to have some sort of line directly to the top, directly to you as the business owner, to make sure that any of your employees who come across something strange in the business or something that doesn't feel right, they have that comfort that they can come to you and chat to you about it and say, listen, this doesn't sound or feel right. Maybe we should have a look at it. Because more often than not, fraud is uncovered through a tip received or someone actually saying something that they've seen. Do get to know your employees, both before and after hiring them. So before you make a hire, do the due diligence, credit, background checks, phone references, and also consider criminal record checking or criminal background checking for those specific positions in your business where the person might handle money or play a financial role. After hiring your employees, keep in touch with them. It doesn't have to be more than a working relationship, but get a feel of what's happening in their lives, because that way you possibly could spot some warning signs, for example, changes in their circumstances or something that might be weighing on their minds that could possibly be an incentive or a pressure for them to commit fraud. Something interesting that I read the other day about hiring employees is that character may be more important than skill. One can be taught, but the other one can't. So it's important to always consider the ethical mindset of your employees or even your potential employees. Also remember that even if you have a long-standing employee or a long-serving employee that has proven themselves time and time again, their circumstances may also change, and that could be a possible indicator of future fraud. Do separate duties as far as possible. So if you are a very, very small company, this might be very difficult to do. You might have only a handful of employees, and it's not really possible to have a separate employee for every separate function in your business. But as far as possible, try and keep that separate. And in a couple of slides on, when we look at some specific fraud prevention measures, I will be looking at separation or segregation of duties in a little bit more detail to explain it a bit further. Do get involved in the accounting side of the business. So here I'm talking about a continuous review process. Often, the knowledge that all financial transactions or all accounting records are being reviewed on a regular basis is enough to deter an employee from committing fraud, because they know that the business owner or someone independent is looking at the accounts, so the likelihood that they will be caught out is much larger. So they might even say to themselves, no, wait, I don't want to be caught out, let's rather not even commit fraud. So it's important to think about it as a continuous process. And also make it known to your employees. Make it known that you're randomly or sporadically going to possibly, or on an ad hoc basis, review accounts. But make sure that your key accounts, things like accounts payable, accounts receivable, bank records, payroll, are reviewed at least on a monthly basis. Do train your employees to identify and prevent fraud. Often they will pick up something strange before you do, as I mentioned earlier. So enabling your employees to be fraud aware could help you to prevent possible fraud in future. And then do consider fraud insurance. For a small business, that's not necessarily always practical, but it might actually help safeguard your business from a devastating financial loss, because a small business doesn't necessarily always have the funds to recover from a fraudulent incident. Some don'ts. Don't lose oversight of financial transactions as a business owner. Very important. You must maintain a high degree of crucial oversight over the financial affairs of your company. And if you feel uncomfortable in terms of the financial processes or the accounting, consider possibly upskilling so that you can have an eye on the financial transactions, or think about outsourcing it, which is our last due on the line or on the page here. Don't forget independent outsourcing. You can bring in someone else, an independent accountant or a professional accountant, to just perform a review function on a monthly basis to make sure that any anomalies are picked up. Don't neglect internal controls and processes. Even though small businesses are short on resources often, there are certain controls and processes that you really can implement that make a huge difference in fraud prevention. And we'll have a look at those, some specifics in a few slides on. Don't build a system that depends exclusively on trust. Even though you know your employees really well, they've been with you possibly for many years, don't over-rely on delegation and be too hands-off with your business affairs. As a business owner, make sure that you are very involved in the financial side of things as well. Don't rely solely on annual audits or reviews. So an annual audit or a review of your financial statements happens every 12 months. That is often too far down the line to either pick up fraud, or the fraud has been occurring too often or for a too long a period, and that creates a huge loss for you. And just remember also, even though you might have an independent review or an audit on your financial statements, those functions are not necessarily designed to pick up fraud. So there could be something that is missed. So it's much more important to do a regular monthly review of your accounts. Don't allow key employees to excessively accumulate leave. As I mentioned before, those employees that don't take their leave, they might be using that to make sure that they are covering up fraudulent behavior. They might want to hide their fraudulent trail. And something important to remember is don't ignore the small things. Don't become complacent, especially with long-serving employees or hardworking or popular employees. Because it's easy to get distracted with the pressures of running your business, and you might think, oh, but wait, why is this supply not being paid? Or this is a strange payment on my bank account. I'm not really sure what this is. And they're not following up on it. Because it might be these small things that are warning signs or triggers that could be the signs that there is being fraud committed. And if you follow through on these inconsistencies and these small suspicions that you have, your employees also know that you are more vigilant, and then they might not commit fraud at all. I'd like to look at some specific considerations as well, because the do's and don'ts we looked at now are quite broad in terms of how you can structure your business and things to look out for. But there are certain areas that I'd like to zone in on that are almost kind of risk areas in your business. So the first thing I mentioned, or the first thing that we're looking at that I've mentioned before, is segregation of duties or separation of duties. And in a small business, that's not always possible. But to understand what that means will enable you to put similar processes in place in your business, even though you might not have as many employees. So the separation of duties usually looks at separating the function of financial transactions to the function of accounting records, and then the review of those accounting records and financial transactions. So I've just listed a few examples here. For example, the employee who loads payments onto the banking system, or who loads payments ready or supplier payments ready for processing, shouldn't be the same employee who authorizes it or checks those payments or actually releases or has access to the bank accounts. The person or the employee who loads new suppliers shouldn't be the same as the person making payment thereof, because then you might be in a situation where that same employee could create a fictitious supplier and make the payment to that fictitious supplier, and no one will be the wiser. Looking at payroll, the person or the employee who loads new employees onto the system or new hires shouldn't be the same person as the employee performing the actual payroll run or making the salary payments. So you can see that you're splitting the financial transaction function to the accounting record function. Reconciliation of bank statements and making payments and receipts. The person who is reviewing bank statements on a monthly basis or reconciling them to your accounting records shouldn't be the person who has authorization to actually make payments or allocate receipts from that bank account. Invoicing and subsequent receipt of payment. So the employee who is issuing invoices to customers or sending invoices to them should not be the person or the employee handling receipt of that payment, because then it's very easy to manipulate who you are invoicing, how you are recording it into the books, and then where that money or that cash flow is actually being diverted to. And then recording of transactions. So any accounting records and the handling of actual cash. That should also be split. So it's important to remember that the entire or full financial function shouldn't really be done by a single person. If that's not possible, the owner has to be much, much more hands-on and watch those bank accounts like a hawk, review all records and transactions. Or if the owner doesn't have the capability or even the opportunity to do so or the time to do so, then it's something to consider to possibly to get someone independent just to perform a review function on the financial affairs of the company. Cash controls. One of the key areas where fraud is very often committed. Cash controls, important. And a lot of times small businesses neglect cash controls because they know their employees and things are happening quickly, and you're busy growing or you are dealing with problems with customers or suppliers, and you forget about your cash controls. Things like cash on hand or on site being kept in a safe or locked away, not just in the bookkeeper's drawer. If you do handle cash or petty cash in your business, always reconcile it on a monthly basis. Make sure that the cash that you have on hand reconciles to the cash you might have had either at the beginning of the month or even the previous day, depending on how often you can or want to reconcile that petty cash. And be strict about asking for invoices for all petty cash expenses. So if an employee or employees use petty cash to make certain business payments, or they might go and get bread and milk or something for the office, be strict about getting an invoice back for that and use those invoices to reconcile the petty cash. Consider something like if the employee doesn't bring their invoice, then they might be responsible for that amount that they used, even though it was for business expense. And that might encourage your employees to keep a paper trail of all the petty cash expenses. Very, very importantly, reconcile your bank accounts to the accounting records on a monthly basis and pay specific attention to payments being made. Look out for things like strange or new suppliers that you don't know. Recurring payments that might be very small, so you might neglect to follow up on them, but they happen every month. Or possibly payments that you know you authorized, but suddenly it looks a bit strange on the bank account. So follow up on those. Important also to remember that the reconciliation function is almost like a review function, and that must always be kept separate from the person who is actually initiating or processing the transactions. It's independent from the recording function, as we mentioned under segregation of duties. Watch out also for duplicate invoices. Sometimes employees do bring something like that, or forgeries or altered receipts where they've actually taken the cash for themselves. Another important cash control is to have multiple signatories or specific approval required before payments are actually released from the bank account or any payments are made. So where one person, whether it's the business owner or it's an independent accountant or someone in the business who is possibly not responsible for initiating those payments, they sit down, they look at the list of payments, and they check the supporting documents. So they say, okay, if these are supplier payments, who is the supplier? Do we know the supplier? Are the bank details of the supplier that are loaded per this payment still the banking details that we paid previously? Or should we just maybe confirm with the supplier that their banking details have changed? So once you have that review process in place and that authorization before the payment is made, you can very easily stop fraud in its tracks. And then the company credit card. Very often, fraudulent activities go through the company credit card. And it's important to once again have a monthly review of all your transactions and to request invoices for any expenses made by an employee. Because some of those expenses might be for personal reasons and they didn't disclose that. And it's important also then to protect the credit card information of your business to avoid unauthorized purchases. Then expense claims. That's always an area where certain fraud can also occur. So your employee incurs a cost on behalf of the business, and then they come back and they claim their expense. Importantly, a control to always have in place is to sign off on all expense claims. Don't just automatically reimburse them. Request a receipt or an invoice for that expense claim. Make sure that the employee brings their supporting documents, and then look out for things like double counting or double claiming things, or forgeries on their invoices. And checking, is it a legitimate business expense, or has this employee sneaked something in there? So that review process is extremely important. On your supplier side of things, know your suppliers. Be aware or possibly set up a list of preferred suppliers. And if there's a payment going to someone new, investigate that. Know their address, their telephone number, and check bank accounts details. Confirm their details before making payment, because it's very often that money could be diverted easily. And then once again, as I mentioned, when you look at your suppliers, match documents prior to payment. Have a look at the invoices, the purchase orders. Make sure that the goods or services that you are paying for have actually been received before you pay for them. Something interesting also to remember is just check the date on those supporting documents as well, because an employee who might want to commit fraud could be slipping in invoices that are possibly old or not at the correct date because they are false. So just check the dates as well. Access controls. Something that business owners don't always think about, or they think it happens automatically, but it's just something to be aware of. In most cases, even small businesses, we often use accounting systems or technology to help us out. So we don't really have a manual accounting system often in place. So in your accounting system or your software, make sure that you have separate usernames or logins to track and control access to the financial data. Use the audit logs or trails on that software to track and trace all financial transactions. Because if there's an instance of fraud, it's much easier to then trace how it happened and who was responsible for it. Restrict employee access to inventory or goods on hand. So that would help in terms of product theft. And think about something like rotating the duties on employees. So if different employees are rotated from time to time within the functions of the business, obviously dependent on their capabilities, if something or someone wanted to hide something in the books or in the transactions, that might come to light more easily as well. Payroll controls. Reconcile payroll records and your accounting records regularly. So as a business owner, make sure that you have a working knowledge of the payroll system. As your business grows, so do payroll complexities, and it's important then to maintain an oversight over that function as well. Make sure that the person who is reconciling the payroll records or reviewing the records is not the same person as not the same person who's actually processing the payroll. Make sure that there's approval for overtime and leave taken. It shouldn't just be an email sent by an employee to the bookkeeper or whoever deals with payroll. Make sure it needs to be signed off first before it actually gets paid out. And then you can have a look at whether those are legitimate hours being claimed or not. Restrict employee ability to modify the pay rates. So make sure that the access to pay rates and those modifications are blocked off to only authorized persons so that they cannot, or an employee cannot manipulate the amount of pay or salary that is being paid. And always check payroll records for terminated employees, duplicate information, anything that looks a bit strange, incomplete information, because it could indicate either a ghost employee or someone who is making extra payments through an old or ex-employee account and diverting it to themselves. And then lastly, I just want to look at some specific controls around data theft. I'm not sure, I don't believe small business owners, or maybe someone listening might have come across this before, but as businesses become more reliant on technology and we are moving into more and more a data-heavy environment, it becomes more of a risk as a business that fraud might be committed from a technology or data point of view. So it's important to be aware of that and start to implement controls as you go along. So firstly, restrict access to company information, branding, customer lists, any important or sensitive company information. Restrict access to that on a need-to-know basis so that not all employees, even if you are a very small business, have access to that. Set up certain IT controls so that if there's a large data download or a transfer of data or something that happens at a strange time of the day or night even, or over a weekend, that it alerts you as the business owner, that you know, oh wait, something happened in my system and I need to look at what that is. Dispose of confidential information properly. Shred documents. Remove data from electronic devices before you use them again. It's that type of thinking and that vigilance that you need to prevent fraud. Strong password control for all computers and devices that can have access to sensitive information. So think about changing your passwords often. Think about using characters and numbers and making it a very strong password, because it's very easy if you're busy with your business and you have a small number of employees, you trust them to say, oh, here's my password, you can take mine. Just be aware of things like that. And think about a clean desk policy. I know in big corporates that's sometimes implemented, but it's something to just be aware of in small business as well. Train your employees that when they leave their desks, they don't keep sensitive information on their desks lying open for other employees who shouldn't have access to that, who could actually then see it. For example, things like payroll or customer information or credit card information, things like that. With knowledge and awareness and vigilance and being hands-on in your business, which I believe most business owners are, it is possible to prevent fraud and to identify it early, and in that way make sure that your business is not subject to losses, reputational issues, or fraud as such, which is really detrimental to you as a business. If there are any questions, that comes to the end of our session today. Hopefully I've provided you with a lot of useful information, practical information that you can actually use in your business. But if you have any questions, I see our time is pretty much up in terms of our scheduled session, but we did start a bit late, so I'm more than happy to answer some questions if there are any that have come through.
From my side, Madeleine, you've really covered some very, very pertinent issues in small business and certainly provided a lot of information for small business owners on how to protect their businesses in terms of employee fraud. So I think, a lot of the things that you've mentioned is what we see as accountants over time. Great stuff. I think you've done an excellent job in that regard.
Thank you.
Well, thanks, Monique and Madeleine. I'll just, Lena, your hand is up and we've unmuted your mic. We'd love to hear from you. Over to you. Thanks.
Good morning, and thanks to everyone, and thanks for the beautiful presentation. What I'd like to know is if someone has committed fraud into your business using false suppliers, so they will create like a supplier, but the money goes into their bank account. And what are the process to be followed if you want maybe to get that person arrested or?
Well, it depends really on you as the business owner, because I have heard of cases where they don't necessarily open a criminal case against the employee, depending on the circumstances, where the business owner first tries to recover that money or reach a settlement before they actually follow the criminal route. So it depends really. You can either go the civil route and open a civil case against that employee, or you can settle out of court and say, listen, if you pay back the money and you are willing to sign that you have that you won't use any of our information going forward, but you won't or no longer work in the business either. So you are almost like resigning. You could go that route. So it really depends on the circumstances of the case and what would be the best both for the business and protecting their reputation and the accounting integrity, and what would be best for the business owner.
Yes, and just to add to that, basically, we must remember that if you open up a criminal case before a civil case, the police will seize all evidence immediately. And they will hold on to that evidence for months and years on end until that case goes to court. Whereas if you institute a civil case, that's not the case. You still have the evidence in hand as a business owner. Now, obviously, if you're going to institute a civil case, what you're going to want to know is, has that employee got assets in order to attach those assets in a civil case and be able to repay that debt? If that employee has absolutely no assets at all, there probably might not be a point in going the civil route, which is obviously a lot more costly, and then going directly for the criminal route. So it does also depend on the employee and what assets they have in their personal capacity. Do they have houses, cars? What do they have? Can they be attached in the civil case? Otherwise, I would then recommend going straight to the criminal route. I hope it answers your question.
Yeah, thanks. It does. Thank you very much.
Thank you for your question.
Well done, Madeleine.
Thanks, Jolene.
I'd just like to end off on one more note that probably wasn't touched on a lot, but a lot of small business owners need to be aware of, and that's the software, the accounting software that they are using. Very often we see fraud based on the actual software used, and I'll give you an example. For example, if you have a business where you receive both cash as well as maybe EFT payments from your customers, particularly the cash customers, your internal staff will know who pays cash and who pays via EFT or directly into a bank account. And what we found with some of the software, that software can be manipulated, believe it or not. Even Pastel software can be manipulated, or Sage or Xero. And what happens is they might raise an invoice, and they know the money or the cash is going to be brought in when the delivery bloke or whoever delivers the goods or the services, they come in with the cash. And instead of obviously banking the cash, they take the cash. And what they do is the invoice that they raised, they then use that very same invoice without updating it to the system, and then use that same invoice number for another supplier to another customer. This is quite difficult to actually catch. So it's important that you do have an accountant or an outsourced person that knows how these systems can be manipulated, just to check on these kind of things. I mean, we had a client many years ago, one invoice number was used 3 times to supply 3 different clients, but because that invoice was never updated, she was receiving the cash and we never had an audit trail or any record in the accounting records of that particular invoice number. So it's also important to have a look at the software systems that small businesses use. They can be used for fraudulent reasons.
I think that if the amount due to fraud is more than 100K, you have to report it, ? Thanks for that, Hermine.
Okay, Amin, the 100,000K that you're talking about is which court that criminal case would land up in. I'm not a lawyer myself, but unfortunately I've been involved in quite a lot of fraud cases as an accountant over the last 30-odd years. So if the fraud amount is less than 100,000, the case, if the criminal case it's heard under the magistrate's court. If the amount is over 100,000, the case is heard in the high court. So it's not a matter of you have to do anything. I don't think there's any law that you have to do anything in regard to reporting fraud. Obviously, it's the right thing to do, the morally right thing to do. But perhaps that's where the confusion is. I'm not quite sure if there's something else you're aware of that maybe I'm not aware of that relates to that 100,000.
There we go. Hello, Neil.
Hi. Yeah, it's just a comment. It just seems to me that I think if you have a case of employee fraud, it would probably be a good idea to bring in a labor lawyer to advise you, as to how to proceed in terms of dismissal, etc. But also probably, a labor lawyer would also, either be able to advise you to a certain extent or refer you to, another lawyer in terms of how to proceed, in terms of of going ahead with a civil case, and also how to proceed from a criminal law point of view.
Absolutely agreed, Neil. That's 100% good advice. Very much so. Madeleine, thank you very, very much. Very good, very interesting, and very thorough. Thank you.
Thanks, Shane. Thanks for your background support.
Thank you so much, Shane,
Pleasure.
for your wonderful hosting, as always.
I love doing it for you guys.
Thanks very much. Bye-bye.
Thanks, Madeleine. Thanks, Monique. Cheerio. Cheerio, everybody.
Bye.